Hello everyone and welcome back to our channel. Alright, today we're going to discuss about the recent hot debate of a merger between Sembcorp Marine and Keppel Corp. Okay, for those who have not been following the news, during a virtual EGM, Extraordinary General Meeting, held on 16 February, a majority of the Sem Marine shareholders voted to acquire Keppel Corp's offshore marine division. So with the deal, right, the two companies will be merged to form one of the world's largest offshore marine engineering companies, with a total order book of almost 20 billion. Alright, but as you know, Sem Marine was already in a bad shape before this acquisition, so they won't be able to pay Keppel Corp cash. So in return, right, Sem Marine will issue up to 36.8 billion new shares to them, and Keppel Corp will distribute these new shares, okay, to the existing shareholders. This impact is pretty significant for both sides, given this very big 4.5 billion deal. So in this video, I'm going to share with you the short-term and the long-term impact that you need to know, and my thoughts on how you can actually capitalize on this big event. Alright, but before that, okay, for more ideas on how to invest your money and discover winning stock ideas, make sure you subscribe to this channel and hit the bell notification. Alright, in return, I will share with you a financial meme. Okay, so with that, let's dive into the short-term impact of the merger first. Okay, to simplify things for you, I've already done up a new structure of the new entity using PowerPoint with my very limited design skills. Okay, so what you can do is to follow the chronological order with the bullet points, or you can simply just pause this video to take a look at the structure properly. So, after issuing the 36.8 billion shares, the new exchange ratio, the existing Sembcorp Marine will only form up 46% of the enlarged new entity shares base, while Keppel, their side, will get the remaining 54%, out of which, okay, it will retain 5%, probably as a keepstake, and then distribute this 49%. So imagine the enlarged Sembcorp Marine, 49% will be distributed as share in specie to the existing Keppel Corp shareholders. So all in all, right, Keppel Corp shareholders will receive 1,913 new Sembcorp Marine shares for every 100 Keppel Corp shares they own. And more importantly, right, you have to remember this key date, 1st of March, because this is the date where around 35 billion shares will be floating into all the Keppel Corp shareholders' accounts. And like what our friend here in Investing Note has shared, okay, assuming just 1 out of 10 people want to be safe and cash out of the Sembcorp Marine shares, that will be already a whopping 3.5 billion shares worth of selling volume. If you compare the huge selling volume to the daily traded volume of 100 million shares, okay, as you can see from the picture here, it is almost guaranteed to take a punch on 1st of March. All in all, the short-term outlook is pretty negative. So, what about the long-term picture for Sem Marine? And apparently, my wife owns Keppel Corp shares, and she just simply go, "Hey, so Sembcorp Marine shares good or not?" So as a good husband, I definitely have to do the analysis for her, right? Okay, so here's what I've done the research regarding the long-term prospects for Sembcorp Marine. To begin, okay, let's take a look at what the analysts are saying. OCBC Investment Research believes that the combined new entity will result in a premier global player in the energy sector, capturing both traditional as well as renewable energy contracts. So they have raised the Sembcorp Marine target price to 18.5 cents. Okay, that's a huge jump from whatever price, around 12 cents or 13 cents for Sembcorp Marine right now. And the other analysts, CGS CIMB, they are positive on the management's target to have renewables constitute 40% of annual sales by FY 2030, or in other words 7 years later. All right, so that's a pretty long time now. Okay, and their target price is around 19 cents, very close to OCBC. 19 cents for Sembcorp Marine stock based on the PB ratio. So they base it on 1.6 times of the FY 2023 forecasted PB, and they already did a 50% discount to the average 2 to 4 times PB ratio during Sembcorp Marine better times in year 2013 to 2016. And right now, Sam Marine is trading at only 1.1 times PB, right? So if you were to ask my own opinion, okay, I would definitely go to stock analysis platforms, like Share Investor and Simply Wall Street to check out the numbers behind it. Okay, so firstly, right, let me dig up the PB ratio history of Sembcorp Marine inside Share Investor platform. From what we can see here, the current PB is at an all-time low in the past decade. I would say that the average, the 10-year average of the PB ratio is around 1.8 to 2 times, pretty similar to what CIMB has given. But then again, this is only possible during the good times where Sam Marine, they're around net profit 9 to 10%. You can even see how their margin, right, is almost 0% or negative in the past years. I will hop over to Simply Wall Street to compare with the global peers, right? Since they want to become a global shipbuilding company, right? Okay, so based on this price to book ratio versus the peers, I've edited to include some of the big names in the industry. So we have Mazagon. Okay, this is a very large India shipbuilding company. Okay, we have China Shipbuilding Industry and Yangzijiang Shipbuilding, both from China. Okay, and Korea, we also have Hyundai Heavy Industries. From the chart itself over here, you can see that Sembcorp Marine of 1.1 times price to book is pretty on the low side as you compare to the global peers other than the China. Okay, and my ending thoughts on this is pretty ambiguous. Okay, what do I mean by that? But before that, a quick disclaimer: this is not financial advice and not an intention to serve as any recommendation to buy or sell stocks. Okay, so to conclude, all right, I think the worst seems to be over for Sembcorp Marine, and brighter times are ahead after the merger. Not to forget their huge order book backlog. And whereas on 1st of March, when everyone is busy selling off the shares, if the share price drop to below 12 cents, below their price to book, to maybe around 10 cents, it may become a deep value opportunity as it rebounds based on the mean to reversion concept. Okay, so the mean to reversion means that every time you go down very deep, okay, you will rebound back to the average. Again, for more ideas on how to invest your money and discover winning stock ideas in the Singapore and US markets, make sure you subscribe to this channel and hit the bell notification. I also appreciate if you can help to smash the like button on this video. Next up, if you want to check out 5 defensive Singapore stocks with at least 4% dividend yield, do check out this video over here. Alright, I will see you next time and thanks for watching this video. Bye bye.